What's up, guys? Today we're talking about market manipulation. Market manipulation is a lot of things, right? It can go from insider trading to spoofing to just dumping a lot of things, shorting, a lot of ways to manipulate the market. So let's go right into it. We're gonna talk about people like this guy.
Yeah, sounds judgmental. So what we're going to do is we're going to call your credit situation.
We're gonna talk about this guy and Jane Street, Wall Street, all the big market manipulators. So first of all, why am I doing this video? Well, because there's so much going online, This is how they manipulate. They lied, short seller, how to read market manipulation. Look, there's so many videos, so much information and misinformation and falsehood out there about market manipulation. So first of all, one thing is insider trading. It's not exactly market manipulation, okay? When I talk about market manipulation, I'm more thinking about massive funds, massive banks manipulating the price of things rather than just insider trading. But insider trading is a thing. So if you don't know what insider trading is, I don't know, you lived under a rock, but it's when somebody who has inside information from a company is trading their own company, or somebody from the government who has inside information of what the government is going to do is going to trade some companies that are affected by that government decision. So you have company insider trading, government insider trading, institutional insider trading. So back in the days, still nowadays, we have a lot of people who insider traded. For example, this is from zlk.com, real life example of insider trading. Martha Stewart in Unclone System, this was such a scam. Rajaratnam, Galleon Group, this was a big one. Enron, Ivan Bosky on Wall Street, Joseph Nakio, Quest Communication. On Amazon 2017, Brad Kennedy, Rajat Gupta, and there's so many, okay? These are just like 10 most recent major cases that we know of. Then there's a lot of that we don't know. So this is company insider trading, but the biggest insider trader are by far people who work in the government and inside trade based on the foreknowledge they have on government decision. And one of these is the one and only Nancy Pelosi. Now, I don't care if you're a Democrat or a Republican. There are many Republicans as well who did insider trading, but she's definitely the one who did the most. So she's the most famous. She's the one that made, come on, if you work in Congress, you get something like $250,000 per year, maybe 1 million per year. She has 270 million net worth and a 200 million trade volume, which is incredible, right? So I'm not sure, according to the country that you are in, there are laws that should prevent insider trading from happening. But what happens is, for example, in the case of Nancy, that she goes to her husband and tells him, hey, buy this, sell this. So in this case, it's her husband who is trading a lot, but as you can see, she made a lot of money. That's why people even created a website where you can track you can track Pelosi, and you can track the next Pelosi, you see. So for example, in 2025 she mostly sold, and it was kind of a good call. So you can just copy trade her and you're probably gonna make a lot of money. I'm not doing it, but probably I should start doing it. Anyway, so this was insider trading in the, let's say, traditional way. Now with the new administration, they are proposing a law that hasn't passed yet, but they're proposing a law that bans people from the Congress and their family to vote, to trade. So basically they want to stop insider trading. But unfortunately we have a thing called poly market, where you can go and take bets on the market, which is basically like trading, and you can use crypto to do that. And to do that, you could kind of do it anonymously if you know what you're doing. So it's kind of almost impossible to stop insider trading, because you can use crypto, which is kind of anonymous, and maybe get away with it. The truth in reality, if you make big trades and the government comes after you, even if you're using crypto, they're gonna catch you. So this is the case for this being in Iran. In Israel, somebody traded the Iran attack before the market knew about it. And then in the US, somebody leaked information about the Venezuela military operation and put a poly market bet on it. And they also got jailed or at least sentenced. So now, so it's kind of possible, right? Even if they're gonna ban you from stock trading, you can still go on poly market, but you gotta be like kind of a, secret service agent or somebody who has really deep knowledge on how to be anonymous to not get caught doing it. And before going into who should persecute these people, which is the Security and Exchange Commission, let's check like this one clip here. So this clip here is from the one and only Jeffrey Epstein, and he also, when asked about hey Jeffrey, how did you get to work at Bear Stearns, such a big financial institution? You dropped out of college, you didn't have any competence, so how did you do that? And he says something like this, talking about the first experiences as a trader. He's saying like, I had no money. So
When I went to the first person, I had no money. And I said, how much money do you make a year? And he said, $400,000. I said, impossible. I'm making $10,000.
That's probably more than your family had made in its entire existence.
Yes. And he makes it in a year. I said, what do you do? And he said, it's too complicated for you to understand. Which is what the main thrust of Wall Street people, they want to tell you it's too complicated. Because if you understood that that person was simply, he had a brother-in-law, in fact in this case, who ran the pension fund at General Motors. His brother-in-law would call him and say, buy 1,000 IBM. He'd hang up the phone, he'd write it out on a ticket and walk it to a window. That was his entire skill set. Hello, write what my brother-in-law says, walk it to a ticket window.
basically he's saying that the first mentor he had was an insider trader and he didn't have any skills, because it's kind of difficult, if not impossible, to beat the market. So you need insider information. The thing is, who should go after these criminals? Because it's a crime. Insider trading is a crime. So who should go after these people? Well, the Security and Exchange Commission should, okay? The other institutions, depending on which market we are talking about, is the CFTC, Commodity Futures Trading Commission. So they should be the one going after these people. But are they really doing it? And they should also do a lot of other things, like try to search for fraud and falsification, financial frauds in general, and market manipulation. Explicitly, they have a mandate to investigate and counteract, basically, market manipulation. So if anybody of you know what happened in 2008, you know that there was a big financial collapse and they made a movie out of it, right? The Big Short. Almost very close to the truth. It's not the full truth, as all movies are. But in this movie, the guys kind of investigating the thing, they go and ask the SEC, right? Remember the SEC, if they know that these illicit practices are going on. Specifically, we were talking about subprime market, but we're not going into that. And this is what happens.
The SEC. She just told me she's in town, okay? So if we're missing something, maybe she can tell me, you know, give me some...
They are investigating whether the SEC is investigating on this financial fraud. And so they go and talk to this SEC girl and...
Estimated big banks. I mean, you're supposed to be the ones, you know, policing the big banks. There must...
So, you know, he goes and say, you are the ones supposed to be policing these banks. And she basically, I'm not gonna play it because I'm gonna get copyright strike, but she says, forget about it, you know. We're getting money from them. We are not, I'm there, I'm on a pool drinking, you know, my drink, my mojito. I'm not gonna investigate. So they're not really investigating most of the time because they are in cahoots, right? They are partner in crime. Most of the time they are partners in crime, unfortunately. Now, what's exactly market manipulation? It's mostly done by people who has a lot of money. So people like funds, banks like JPM, Goldman Sachs, Bank of America, all these kind of institutions. Jane Street, we're gonna go through that specific case later. So there has been cases in which, luckily, the US Security and Exchange Commission, the SEC, did their actual job, and they went after these people because they were doing market manipulation. So, for example, just 6 years ago, JP Morgan had to pay a 920 million fine for manipulating precious metals and treasury market. So, you know, they had to pay almost 1 billion in a fine to the SEC, which, you know, they were caught basically short selling silver and gold and doing other market manipulation things with treasury market. And you can see that's one of the biggest and most recent cases. But there's way more than this, okay? You can see Deutsche Bank also in 2018, 30 million civil penalty. Also doing spoofing in precious metals. And then another one in 2020 for, you know, other things. Tower Research Capital, trading firm, a record 67 million fine to the CFTC. And Goldman Sachs, $55 million, and then another one for 120 million in 2016. And there's so many other ones, HSBC, TD Security, and smaller firms. So as you can see, it's not just you know, this bank, this other bank. Most of the big institutions do it. Again, JP Morgan, Goldman Sachs, HSBC, TD Security, Deutsche Bank. These are the most trustable banks out there, and they are doing it. Now, there is a problem here because the system, think about it, there is kind of a loophole here that the US, the SEC and the CFTC, they have to go after these people because they do market manipulation. But then they get paid, right, with a fine. But the fine does not go, like the money collected with the fine does not go to the traders who lost money, right? If I'm trading the market and I lose money because the market is manipulated, they're not giving back the money to me. They're not giving me 1 cent back. They are taking the money. So the government is taking that money. So you see, like, even if they do this kind of crimes, yes, the government is kind of okay with that, because then they say, hey, we caught you. Now you have to pay a fine, to pay a settlement fee, and you pay the SEC, you pay the FTC. So basically this, you know, and they got 1 billion in 2020, which I believe it's more than their budget. But anyway, you know, so these people are making, these organizations, these institutions that should police the central banks, are actually making money when they get them. So I'm not sure. I think there should be another mechanism, like just putting them in jail. JP Morgan traders, they should go in jail for having manipulated the silver market. And now, so you can go and look it up for yourself. What is spoofing? Spoofing is an illegal market manipulation tactic where a trader places large fake orders to buy or sell securities such as stocks or futures without intention of executing them, by creating a false appearance of supply and demand. So what is it meant here? It's meant that for every asset, now I will take Bitcoin, there is a so-called order book, right? So let's check, for example, the Bitcoin case. Right now the price is sitting here, 66,300, and there are, you see, all the green ones are buy orders, right? Buy orders, and the red ones are sell orders, right? So the price is moving based on this order book, how many people are buying and at what level, how many people are selling, how much money is selling and at what levels. So what they were doing with silver and gold, they were putting like huge sell orders up there. So people, algorithms and traders who look at the market orders, at the book order, and they just say, okay, there's just too much sell pressure. Okay, so right now if you see here, there is a lot of buying pressure, and then there's some sell pressure here at 67, 69. So people actually trade based on the order book, right? And the price moves based on the order book, even though it's an order up here, right? Like as you can see now, for example, the buying pressure is way more than the selling pressure. But if somebody would come and put a giant sell order here at 68, 69 or 67, doesn't matter. If somebody would put a big order here to sell, all the people looking at this, they would say, oh, whoa, this guy must know something. And so I'm not gonna buy anymore, I'm gonna sell. And then the price goes down. It's kind of both psychological mechanism and intelligence mechanism and mathematical mechanism, because there's both people and algorithms, bots, looking at these order books, but it's mostly bots. So if JP Morgan puts a sell order here, a big one, people are gonna get discouraged and bots are gonna see it and they're gonna start selling. That's how that's mainly how they do manipulate price. Okay, now let's go through another one which is talked a lot. That's the CME. The CME is that's the Chicago Mercantile Exchange. So basically this is a stock exchange in Chicago, and they are famous for trading futures. If you don't know what futures are, don't mind. It's just like market things. Basically they are trading stocks, right? I'm not, if you know, you know, if you don't know, just Google it. But they are doing market making, right? They are market makers. They do basically the order book, right? They are the ones receiving all the orders and receiving the buy orders, the sell orders. They provide liquidity for it, and there's a lot about them. So of course they are in Chicago. That's their main headquarters. And well, just this conspiracy parenthesis. Look at the address, 60606. In other terms, they stand. Their headquarters is at 666. You know, they want to remind us that they are satanic. So they are not a fund. They are not a bank, but they are kind of a market exchange. You could say futures exchange, but there's a lot of allegation about them manipulating price, and I wouldn't be surprised if those allegations are true. Again, I'm not saying anything for certain here, but they're probably true. Why? Well, in exactly October 31st, 2017, they announced that they were doing future contracts But then the futures contracts on Bitcoin, started exactly on December 18. So again, now you have to understand what future contract is. What does it allow to do? It allows to short, not just to buy and sell, but to long and short, right? What is shorting? It's basically selling this stock, or in this case Bitcoin, even if you don't have it, right? So in simple man words, it's betting on Bitcoin to go down, or it's actually putting your money so that with that money you borrow more money, but then it's used to sell Bitcoin even if you didn't have it, with the promise to then buy it back at a lower price. So basically short, what shorts create, what futures create, is the possibility of longing and shorting. Open a long position or open a short position. If you open a short position, what you're effectively doing is selling the asset, even if you don't even have it. You don't even have the actual asset. You never bought Bitcoin, but you're shorting it because this, this is the market. That's what you can do. Basically, borrow money to sell short Bitcoin, or sell short stocks, sell short gold, oil, whatever. But this is the case for Bitcoin. So tell me if this is a coincidence that the day that people actually were able to do that, this day here. So this Monday, December 18th, 2017 is when they launched the CME futures. And exactly on that date, bang, we had 1 year of downtrend, and they basically stopped the bull run, and it went down 85% for the next year, right? So people say, this is just a conspiracy theory. It could be that it's just a speculation, but because we already had kind of a bubble, right? It was going up too much too fast, so it had to come down. But it's kind of odd that exactly on the same day they allowed futures on the CME market, right? Exactly the same day that they allowed people to short, the market went down 85% in the next year. Of course, it's not a coincidence, because what a future is, single stock futures, what a future is, what it allows is basically for big money to bet against this particular stock or asset, in this case Bitcoin. So and you can do it with leverage. So if they have 1 billion and they use a 10x leverage, now you have 10 billions worth selling Bitcoin. And they have way more, they have 10 billions, they have, if they have 10 billions, they use 20x leverage. Suddenly you have 200 billions showing up here in the order book, right? So the market is gonna tank for sure. And that's exactly what it did. So that's another market manipulation specifically for Bitcoin. And I'm waiting for people to tell me, this is just a conspiracy theory. Please bring me up the evidence that I am lying. Bring me up the evidence that there's no coincidence in the fact that the futures were launched on December 18, and on the exact same day, everything's, Bitcoin particularly started tanking so much. Of course, there are other factors in it. There's macro factors, there's liquidity, but it's kind of odd, right? It's kind of odd, let's be honest. So, next one. The next one is Jane Street, okay? Jane Street is the hot topic, okay? It's the real deal. Jane Street are these guys right here. So it's a fund, Jane Street Capital, but it's also, that's kind of confusing, it's also a street. Okay, let me just get it for you. Okay, this one, you see, this is Jane Street, and it's not far from Wall Street. Okay, relatively it's not far from Wall Street. So it's a street, but it's also a capital management fund, right? It's Jane Street Capital. Okay, who are we, right? Well, established in 2000, evolving ever since, funded by a few traders, blah, 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 doing quantitative trading. responsible risk management, humility. Yeah, sure, for sure. Very, very humble. Just joking. So it's a street, okay? It's a street not far from the financial district. It's this long street here, but it's also a capital firm, a fund basically, which is situated here in Vesey Street. And it's not far from Wall Street, okay, from the financial district. But so I've heard so many people saying that it was basically Jane Street is the government versus Wall Street is the financial sector. But this maybe is true for the actual road. Wall Street is where the financial sector is, versus Jane Street is where the government buildings are. If you ask Google, is Jane Street US government, covert US government? No, it's not. Of course they tell you it's not, but I'm still not convinced that's true. And now I'm explaining you why. I think it's either the government, or at least maybe it's not the government, okay, because it says, you know, it was founded by a few traders, and there's no direct connection to the government. But what we are sure about is that these guys are shorting the hell and manipulating the hell out of things, anything they can get their hands on. And my theory is that they are government, they are kind of deep state, not government, but they are deep state related somehow. Or maybe they're not, they're just bad people who like to short things, who are vulnerable to shorting and market manipulation. And these are not these are not allegations. This is Reuters saying that Jane Street, the US trading firm, is facing it in India. This is 1 year ago. And yeah, basically the market regulator also impounded 567 million from US based Jane Street. Okay, so they are asking them a lot of things. You see, in 2024, Jane Street annual revenue was 20 billion. Okay, so these people are making lots of money, extracting money from the market with market manipulating techniques. So what are the allegations in this case? India's market regulator says Jane Street, a group of aggressively bought, first aggressively bought significantly quantities of banking stocks and futures, temporarily pushing up the banking index. Then they built large short positions, and then they basically lost. They basically sold everything and they profited from the shorts. This is the oldest technique ever, right? Like they buy a lot, then they build short position, they sell a lot, and the shorts make money. This is like market manipulations 101. So they just, what are they doing? They just select market in which they can do this. They have low liquidity, and yeah. So Indian market, the Bitcoin market, the crypto market, it's relatively lower liquidity than, let's say, the Nasdaq, which is the most traded, or the S&P, which are the most traded index in the world. But I'm pretty sure they're doing it there when they can too. So yeah, they got banned from the Indian markets, but that's just one that was proven. Let's take a moment to realize that how many things were not proven, yet they're still happening. So another thing is, if you don't know, in 2022, okay, in 2022, there was a very good project called Luna, or TerraLuna, which was basically creating a stable coin, a crypto stablecoin, through algorithmic backing, not actual physically backing, but with an algorithmic process. It's a bit complex, not too complex, but I will not explain it here because then we will be too long. But basically, it was a good project that attracted a lot of capital and attention and hype in the crypto space, and not only in the crypto space. So a lot of people invested in this. You see, it basically went from zero to hero in just 2 years because it was a good project and from the Koreans. And then what happens is in 2022, it basically went to zero. It's still trading nowadays, but yeah, it basically went to zero. And this created a collapse, a ripple effect basically, that made the whole crypto space collapse. So if you look at this the time frame, this is the time frame. So this is when we had a real bear market drawdown in Bitcoin, but in anything, you know, just took, I don't know, take Filecoin, Bang, whatever you want, Binance, Bang. We are talking about May and June, specifically May 2022. That's where we got this big drawdown right here in all crypto-related assets. And then it spilled over to the traditional market. But anyway, so this guy, Terra creator, Do Kwon, was sentenced to 15 years in prison because of the crypto collapse. And you know, a lot of people were saying, oh, he was fraudulent, he was a scammer. I never thought he really was a scammer. Never, for not even 1 second. Maybe yeah, for a couple of days, yes, but I was never convinced of him being a scammer because the project was kind of solid. They only made a mistake that was like they bought Bitcoin with the token and they, you know, cross-collateralizing stuff, and the thing kind of was not super solid. But the project was, I think at least they had good intentions. I'm not sure, but I think he had good intentions. So he kind of ran away for a couple months, maybe a couple of years, and then he was arrested and, you know, sentenced to 15 years in prison. Okay, 15 years. So people who, you know, epic fraud. I'm not sure it was an epic fraud, bro. Maybe it was, but I mean, the market had all the information about how the project works. We just that the market believed too much in it, and then they kind of mismanaged money. But you know, if this is fraud, all banks are fraud. But anyway, he was sentenced to jail, and now finally, I don't know why, but they're coming up now, okay, in February 24, so like yesterday, they're coming out with a lawsuit again against, guess who? Jane Street. Now they're saying Jane Street was behind the 2022 crypto winter, the bear market, destroying Terra by first depegging the token and then destroying the ecosystem, then pretending they would rescue Terra while effectively, yeah, they were shorting and whatever. Anyway, yeah, Jane Street was behind the crypto crash. Somebody says it's behind this crypto crash as well. And the solution is a fine of 1 million. And let's start the bull run again. So again, they have kind of they think they have evidence that these people, the Jane Street guys, okay, these people, look at what they say. You remember what they said? Ethics and honesty, humility, ethic and honesty. I mean, come on, you gotta be kidding me. You destroyed the Indian market, you destroyed the crypto market, you are destroying again the big market. You got caught doing it this time. And as you can see, this mail is redacted. And there's all the actual story here. I don't want to go through too much details. You can read it, check out the Zero Edge post. He made an article on it and so on and so forth. But basically, yeah, they destroyed a crypto project. And not only that, there's rumors, which are not rumors anymore because it's too easy to correlate, that almost every day at 10 a.m. New York time, which is 6 a.m. Central European, 4 p.m. Central European time, so just like as soon as the market opens, 30 minutes later, there is a systematic dump of crypto assets, okay? And you can check it out, like for example, here there's a thing called the 10 a.m. slam, okay? You see this Zero Edge, very prominent market commentator, and as you can see 10 a.m., 10 a.m. slam, 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 10 a.m. slam. Every day 10 a.m. slam. Look at this chart, wait for it. 10 a.m. bam. It's 10 a.m. bam. So 10 a.m. bang. 10 a.m. bang. So almost every day at 10 a.m. there is a crypto dumped. And what happens? Why at 10 a.m.? Because it's 9 a.m. in the New York. It's exactly when these people, when Wall Street starts to operate, and Jane Street as well. So what we think is that Jane Street started this thing, and then just everybody started playing along with them, like even small traders. Now they're just like, yeah, let's just short the market at 9:30 a.m. Yeah, sorry, it's 10 a.m. for them, not 9 a.m. So at 10 a.m. in New York City, you just start a short at 9 a.m. and you're statistically advantaged because most of the time at 10 a.m. there is a slam. So market goes down, that's manipulation. And it kind of became a self-fulfilling prophecy. But this is a comment from 2 years ago. The daily crypto 10 a.m. slam started to spill over into the stock market too, because algorithms start selling. They see crypto selling, they sell other things, and or maybe some people want to buy crypto, so they sell other things, so that there is a sell-off at 10 a.m. almost most of the time. So we are almost there nowadays. That's why I'm gonna shut the video down and maybe short it, who knows. But anyway, there's this 10 a.m. slam, and guess what? After the lawsuit against Jane Street yesterday, the day before yesterday, for the first time in 2 months, we have a full day of Bitcoin trading without a motivated seller taking out the entire bid stack in one trade to crush momentum. Look, usually at 10 a.m. here, right here, right here you have a dump, which you kind of had a little bit, right? You kind of had a little bit of a dump still. But then, it was not sustained enough, and now we are back up, and we're up even more right now. You can see right now it's almost 10 a.m. in New York, and we're going up. We're just going up, okay? So maybe, just maybe, because they got a lawsuit against them, maybe they stopped doing it. But I'm pretty sure they will come back again, because they were just probably gonna stop doing it for a few months, and then as soon as they have the opportunity to do it again, they will do it again. So what's the conclusion for this? The conclusion is that markets are manipulated, not just crypto markets, but silver, gold, stock market, oil, whatever it's tradable. Big money, not just insider trading, but big money can manipulate, through spoofing, through pump and dumps. So, they buy the whole thing and then they sell the whole thing because they just have more money, and then they can borrow money. Because they have so much money, they can borrow even more. They can use leverage on what they have borrowed. So, if they have 1 billion, they can access 100 billion of capital. And that's why they can manipulate market. There's an estimate that Jane Street holds roughly 10% of all US stocks. So 10% is just them. 10% of the trading on the Nasdaq, sorry, I think that was the measure. 10% of the trading on the Nasdaq, on the New York Stock Exchange, is done by Jane Street. So let's just imagine, if they lever it up, they have way more. So 10% on a single entity, it's a lot. And maybe they have some friends in JP Morgan and some friends, and they say, hey, let's short at this time, let's short this other time. So that's how the market is manipulated, again, by the centralization of money. Centralization of money is what allows market manipulation. If you give your money to the bank, if you give your money to a fund, you are allowing market manipulation. So the thing is, remember we had the Security and Exchange Commission and the CFTC, which in the US, and then in other parts of the world you have other institutions. But these institutions their mandate is to go and arrest these criminals, or at least stop them, preventing them to do this market manipulation, because it's unfair. So that's why we have digital. So there are regulations for silver, there are regulations for silver trading, gold trading, general traditional stock market, traditional finance. They have regulation, they have laws that makes it so that the SEC and the CFTC can go after these people, okay? Exactly how it happened with JP Morgan, exactly how it happened, remember, with Tower Research Capital, it happened with Deutsche Bank, it happened with Goldman Sachs. So these people are allowed legally to go and persecute these criminals. But this is not happening with the crypto market because there is no laws yet. It's the wild west, okay? Also because it's global, but mostly because there is no law. So if at least there was a law to prevent market manipulation, maybe something would change. And that's why we have the Digital Asset Market Clarity Act of 2025 that is proposed by the current US administration and has not yet passed, but we really hope it's gonna pass. And a lot of people are saying when this will pass, the new bull market will start, because they will not be able to manipulate at this scale and walk clean with it. Because maybe they will be able to do it and then pay a fine to the SEC, but it will still happen. But at least there will be some sort of accountability. I hope there's gonna be full accountability, but hope it's not a strategy. The last one I'm gonna talk about, it's regular daily short time frame market makers manipulation, and this opens up basically your mind, and opens up the speech to the discussion to a lot of conspiracy theorists of the fact that probably these people, the Jane Street, the Binance, the Bybits, the banks, they're all together. They meet or at least they speak to each other and they collaborate, because there is a thing called leverage trading, right? With inverse contracts, you can trade with leverage, and if you trade with leverage, you can get liquidated, which is a synonym for saying you can lose all your money because you are borrowing money to buy or sell, which is long or short. So, for example, if we just look at Bitcoin in the last 3 days, okay. You can go and check it out yourself. This is CoinGlass. Thanks a lot to CoinGlass. You can see that right now, in the last 24 hours, 300 million got liquidated. So the market makers, the exchanges, they actually took 300 million from the traders, right? And here you can see the levels, right? If the price goes down to 64 million, there's 125 millions that will get liquidated. This is a model. We're not sure if it's exactly like that. We're almost sure. And then there is one at 62. So if the price goes back to 62, a lot of 99 millions get liquidated, right? And the same is true like If you go up, the shorts will get liquidated. If you go down, the longs will get liquidated, right? So basically, the big conspiracy theory here is that the market makers and the people with big money, they talk to each other and they try to push price down or up to where the most liquidations are. So let's just look at price history, for example, of the last year for Bitcoin. And this is true for Bitcoin. Bitcoin is kind of open source environment, so people put out the data on this, but you don't have data on where the gold market liquidations heat map like this, or like stock market liquidation heat map. You have it for Bitcoin because we have a spirit of transparency, but that should be out for stocks too, probably. So for example, here you see back in 2025 there was a chunk of lot of liquidations here, and bam, the market, what did the market do? Bam, it went up, all the shorts got liquidated. And then again here there was some short liquidations here, the market, bam, just went up just enough to liquidate these people, and then back down, and then up, and then down, and then here it didn't liquidate. It went up to liquidate these first, and then down to liquidate even more people, right? So basically you can kind of bet, and that's what people call liquidity grab also. Some people call it like that. There's a lot of liquidity here, there's a lot of liquidity here, there's a lot of liquidity here, and that's why the price gravitates where the liquidity is, right? So right now, as you can see, most of the longs got liquidated, and so if you look on a 1 month time frame, for example, most of the longs got liquidated already, right? Here there was like we went down so much that all the longs got liquidated. Even then, you know, we bounced a bit, then some longs were accumulated here, there was some liquidity here, and bam, we went back here, we just liquidated them, and now it's to the upside. Now we have to go up. Okay, we have to go up because the market makers, the big money, will make even more money if the price goes up here, and then here, and here, and here, and here, and especially here. So expect Bitcoin to go up here because there's a lot of shorts to get liquidated. So yes guys, thanks for watching. We hope the Digital Asset Market Clarity Act will pass, and it will not just be a fake anti-market manipulation bill, and we hope insider trading will be stopped, and we hope that people cannot inside trade on Polymarket. But again, hope is not a strategy, so beware of market manipulation. Thanks for watching. Put a like, share, subscribe, comment.